All right, today we're digging into Eve Holdings' latest earnings call. And this one is interesting because the company is at a really critical point. The market's reaction tells this fascinating story about what investors really care about when you're talking about a company that isn't even making money yet.
So let's just get right to it, the big puzzle of the quarter. Eve actually beat its earnings expectations. Now, you'd think that's good news, right? But the stock dropped right after the call. So the big question is, why? We're going to unpack exactly what went down and what it means for the stock.
Okay, first things first. Let's take a look at the headline numbers. What did the company actually report versus what Wall Street thought they would? So on paper, they beat expectations by a penny per share, -14 cents instead of -15. But here's the thing, and this is absolutely crucial. Eve is still pre-revenue. We're talking $0 in sales. Meanwhile, they lost almost 47 million bucks, mostly on R&D, and they burned through over 60 million in cash this quarter alone. So yeah, it's a beat, but the real story here is all about spending, not earning. Now this this might just be the most important number on the entire report, over $500 million in cash and liquidity. Management made it super clear on the call. They think this is enough money to fund the company all the way through 2027. And that is a huge deal. It basically takes the whole "are they going to run out of money" question right off the table for the near future.
But there's always a but, right? Here's the other side of that coin. That massive pile of cash is shrinking by about 60 million bucks every single quarter. Now, they're on track with their plan, sure, but that number is basically a ticking clock. And you can bet investors are watching that burn rate like a hawk, measuring it against every single deadline on their development timeline.
Okay, so with the money side of things kind of sorted, let's switch gears and look at management's story. Right now, their entire game is about one thing: execution, hitting those crucial milestones.
And here it is. This is the roadmap they laid out on the call. The next huge moment everyone's waiting for, that first flight of the full-scale prototype. That's slated for late 2025 or early 2026. Then it's the really tough part, getting certified by regulators around 2027, and then finally getting these things in the air commercially. I mean, this timeline right here, this is the whole ballgame. It's what the entire investment case is riding on.
And just to really drive the point home, the CEO, Johan Bude, said this himself on the call. When you hear words like final stages, that gets the market's attention. It's a signal that the big one, actually seeing this thing fly, could be just around the corner. So it's not just about the timeline. Management was quick to point out a bunch of other wins. First, that massive $14 billion backlog of pre-orders, still there. They locked in their parent company, Embraer, to build the landing gear. That's a really critical piece of the puzzle. Their Iron Bird simulator is officially up and running, which is a big step in making the real flight tests safer and more predictable. And they're even expanding globally, with a new deal in Bahrain to set up a hub in the Middle East. All of these are little signs that things are, moving forward.
Okay, so let's circle back. The money situation looks stable, and they seem to be making progress. So why did the stock fall? Well, it all boils down to this disconnect: a gap between what management is talking about and what the market actually wants to see right now. And this slide really lays it all out. It's the core conflict. You've got management over here, focusing on their long cash runway, that big backlog, and all their new partnerships. And look, that's all good stuff. But the market is over here, and it's screaming for one thing: proof, tangible proof. They don't want to hear about orders, they want to see flight data. They don't want to just hear about the plan, they want to see that plan get de-risked.
And if you want to see that concern in numbers, here you go. Over the last month, the whole aerospace sector was down maybe 1.5%. Eve stock, down 16%. Oof. That's not just the market being weak, that's the market saying we see specific risks with this company and we're pricing them in right now.
So to really understand what's happening here, we got to pull back a bit and look at the bigger picture of investing in this whole EVTOL space.
It all comes down to this one big, scary phrase: pre-revenue execution risk. What does that mean? It means for a company like Eve, a tiny earnings beat is basically meaningless. It's just noise. The entire value of this company is tied up in the promise that one day they will have a certified aircraft that's actually flying and making money. And so any hint of a delay, any uncertainty in that process, it's going to crush a 1-cent earnings beat every single time. So, when you boil it all down, these are the questions that are really keeping investors up at night. Yeah, management kind of answered the money question, for now. But the other three? You can't answer those on a conference call. They have to be answered by doing. Is the prototype actually going to work as advertised? Can they really hit that certification date? And what's it going to cost to build these things at scale? Until we get hard data on these questions, you can expect the stock to stay pretty wild.
All right, so let's put all the pieces together. Here's our call on Eve Holding.
So, what's the bottom line here?
Our rating is market perform, and here's why. We think the stock price right now is doing a pretty fair job of balancing two giant opposing forces. On one hand, you have this massive long-term opportunity. On the other, you have this very real, very significant short-term risk of just not getting it done. Eve has the money, they have the plan, but that road to certification is incredibly long and filled with unknowns.
Now, for those of you looking for a potential trade idea, the basic thesis is simple. High risk, but potentially very high reward. So the main trade is just to buy the stock and hold on for that long-term ride. But here's the hedge, and this is where it gets kind of clever. You could look at a covered call strategy. Basically, you sell call options against the shares you own. It's a way to use the stock's own choppiness to generate some income. Think of it as getting paid to wait for that big long-term story to hopefully unfold.
And of course, we have to say it, this is not financial advice.
So we'll leave you with this final question to chew on. Eve has successfully bought itself time. They've de-risked the balance sheet. So is it really just down to execution now? Is that the only thing standing between this company and a multi-billion-dollar market? That's the big question, and that's what we'll be watching. Thanks for tuning in.